All right, let's unpack this. Imagine having a roadmap to the market's next big move, almost like hearing the pulse of a giant. That's the fascinating idea at the heart of our deep dive today. We're zooming in on a true titan, Apple, ticker AAPL. For many, it's not just a company, it's a cornerstone of major ETFs. And the burning question on everyone's mind is Apple about to ride its next major upward wave?
Yeah, and what's truly captivating here is how we'll tackle that question. Our source for this deep dive comes from ARAA, an analyst firm known for its, let's say, distinctive approach to understanding market cycles and momentum.
Oh, ARA, right. I've seen their work. Very unique perspective.
Exactly. They've provided us with an in-depth analysis of Apple, really homing in on whether the current market rhythm is signaling a fresh upward cycle, potentially towards that, well, intriguing $260 mark.
$260, that's a number catching a lot of eyes.
It is. So our mission today is basically to distill the most critical insights from their analysis, giving you a clear shortcut to navigating this, complex financial landscape.
Okay, let's dive in. ARIA's core philosophy revolves around reading the flow of time and market cycles. They've consistently championed mega cap giants like Apple, Microsoft, even the QQQ ETF, seeing them as bellwethers for future market waves.
That's right.
So for you, how does ARIA specifically define and interpret these elusive market rhythms? What makes their approach, well, unique?
That's a crucial point because reading the rhythm of time sounds almost poetic, right?
Just a little bit, yeah.
But it's quite systematic for ARIA. They do this by continuously monitoring what they call VPR indices in real time.
VPR indices.
Yeah, think of VPR indices as ARIA's proprietary tools, much like a market's unique electrocardiogram, measuring the velocity and strength of price movements.
Okay, like a heartbeat monitor for the stock.
Kind of, yeah. By analyzing these, they identify specific rhythm points on the charts. Their belief is simple. Those who read the rhythm of time find the way. And right now, they're intensely focused on whether this is Apple's moment to catch that wave. Their analysis breaks down Apple's potential across 3 distinct timeframes, each offering you a clear outlook.
3 timeframes. That sounds like a very layered and comprehensive approach to anticipating movement. Let's start with the immediate picture. What does RA's rhythm analysis tell us about the short-term outlook for Apple?
Okay, short term. ARIA's analysis suggests Apple is currently testing a significant resistance zone, roughly between $230 and $236.
Resistance.
Right. The momentum right now is described as mixed, which means it's not a clear breakout yet, but critically, liquidity remains intact.
And intact liquidity, that's important because...
Well, it implies there's still a healthy flow of capital in and out of the stock. It helps prevent, a sharp, uncontrolled drop, even where the market figures out its next move.
Interesting. So a bit of a waiting game, maybe, but with underlying financial muscle. Now, what about the swing outlook? That often implies a slightly longer, more tactical horizon for many investors.
Exactly. The swing outlook points to a period of what ARIA describes as consolidation at midterm levels.
Consolidation, meaning sideways movement.
Sort of, but they see this as a potential accumulation phase, where larger institutional money might be quietly building up positions.
Oh, okay. Buying without moving the price too much.
Precisely. The forecast for this time frame is a potential move into a $255 to $260 box range over the next, say, 3 to 6 months. If this accumulation plays out, that suggests a significant upward movement from where we are right now.
Right. And beyond that, what about the midterm? We're talking about Apple, a company synonymous with constant innovation and, well, strategic moves. What does ARIA highlight there, especially considering new product cycles and its evolving landscape?
Yeah, the midterm outlook is actually quite bullish. It emphasizes Apple's fundamental strength. Now, AUREA acknowledges rising global competition that's just a constant for a company of Apple's size.
Sure, always a factor.
But they pivot to key internal drivers. The high anticipation for the iPhone 17 launch, with specific mention of a rumored iPhone Air model.
iPhone Air. Interesting.
Yeah, could be a big deal. Then there's Apple's ambitious and evolving AI strategies, and its consistently record-breaking services revenue. These are the core pillars they expect to propel Apple's growth over a longer horizon.
So we have these 3 timeframes, each with a distinct rhythmic pulse. Does ARIA then translate these outlooks into concrete, actionable investment targets for us?
They absolutely do. ARIA provides precise price targets derived directly from their rhythmic and fundamental analysis. You've got a short-term target of $236, a swing target of $255, and that midterm target of $260.
Okay, clear targets.
And their overall investment opinion strongly favors swing and midterm strategies. This is robustly supported by continuous inflows into the mega-cap ETFs, where Apple is, a dominant core holding, though they also prudently acknowledge the short-term risks of a potential pullback. It's a balanced view, seeing opportunity despite potential turbulence.
Right. Always good to see the risks acknowledged. Now, AREA often stresses that investors can easily get rattled by news, which can drain both time and capital. Their solution is a systematic, chart-driven approach. Tell us more about how their chart commentary guides investors, especially with concepts like those VP or indices and identifying strategic entry points.
Yeah, if we connect this to the bigger picture, Area's methodology isn't just about predicting where the market might go. It's really about optimizing when you enter. They advocate for a two-step entry strategy at what they call swing and midterm demand zones.
Demand zones, like strong support levels.
Exactly. Think of them as price areas where buying interest is expected to be strong. Entering in two steps, rather than all at once, is designed to increase both the stability of your position and your overall win rate. Less risk, potentially better average price.
Makes sense.
The source highlights past areas on their charts. They actually circle them where short-term convergence, meaning several indicators aligning, consistently led to significant upward waves. They specifically note that the closer prices cluster near swing levels, which they denote as white lines on their charts, and midterm levels, often orange lines, the higher the probability of profitable outcomes.
So it's like looking for a confluence of signals.
Precisely. This is why monitoring trend and rhythm together is so essential. It's about finding those sweet spots where all the signals converge for a high probability move.
So it's about finding the precise moments when the chart's rhythm is in harmony, signaling an optimal time to act. Speaking of patterns, AUREA also applies Elliott wave theory. Now that's a classic, though often complex, tool for predicting market movements. How does their Elliott wave analysis break down Apple's trajectory across these timeframes? Does it align with the price targets we just discussed?
That's a great question because Elliott wave provides kind of structural roadmap. For the short term, ARA sees Apple currently navigating a wave 3 correction.
Okay, a correction within a bigger trend.
Exactly. For those less familiar, a correction is simply a temporary dip or pause within a larger upward or downward trend. The critical insight here is that a sustained breakout above that $230 level we mentioned could potentially trigger a wave 4 uptrend.
Meaning the correction might be ending?
Right, setting the stage for the next leg higher, according to the theory.
Okay. And what about the swing and midterm views through the lens of Elliott wave? Does that framework support the higher targets, the $255 and $260?
Indeed it does. For the swing perspective, Apple is seen progressing through wave 3-4. This indicates it's in the later stages of a strong move, with potential to expand further towards that $255 target. And for the midterm, the analysis targets wave 5 at $260. In Elliott wave theory, wave 5 typically signals the completion of a larger market cycle.
So it aligns perfectly with AUREA's highest price target.
It does. It paints a picture of a structured, kind of multi-stage ascent for Apple if the pattern holds.
That's a powerful framework, connecting these cyclical patterns to specific price points. But AUREA goes even deeper with what they call detailed rhythm analysis. Can you walk us through what that means for each of those timeframes and how it refines the picture?
Certainly. This is where AUREA really fine-tunes its reading of the market's internal mechanics. It gets quite granular. For the short term, the detailed rhythm analysis indicates a trend reversal. The immediate direction is shifting, and the rhythm itself is weakening.
Weakening rhythm.
But liquidity is okay. Right, that's the interesting part. We still see liquidity expansion, suggesting capital is still active. The key takeaway here is that the $230 resistance level will be a crucial test. Will that trend reversal gain traction or fizzle out?
Got it. And the swing time frame.
Moving to the swing time frame, we see trend acceleration or continuation, a recovery in the rhythm, and liquidity consolidation. This combination defines a current accumulation range for Apple, they suggest, between $220 and $236.
So the rhythm is picking up again there.
Exactly. And finally, for the midterm, it's about trend convergence, with what they term trap resolution in process.
Trap resolution, what does that mean?
Well, a trap resolution often refers to a situation where a false breakout or breakdown a trap for traders is being resolved, confirming a clear direction. Here, despite a currently weakening rhythm, liquidity is expanding again. This implies that momentum from, say, the iPhone 17 and Apple's AI strategies may soon open the path toward that $260 target.
It sounds like a remarkably nuanced reading of the market's internal gears. far beyond just, looking at a simple price chart. And VRA isn't just about predicting. They also outline specific buy strategies. What are their recommended strategic buy scenarios with precise entry points and conditions? This is where theory meets action, right?
Absolutely. They lay out very actionable strategies, almost like a detailed flight plan. For a short-term buy, the entry is suggested at $232. But it's conditional.
Okay, what are the conditions?
It's conditioned on what they call a trap stage, being at least 23 complete, combined with a confirmed rhythm and liquidity reversal. Think of a trap stage as maybe a UREA's internal scoring system, indicating how ripe the conditions are for a major move after a period of indecision or that trap.
So like a checklist of confirmation.
Pretty much. For a swing buy, the entry is around $220. It also requires trap stage 23, plus rhythm continuation this time, and clear market confirmation.
Market confirmation, like the broader indices moving to.
Likely, yes. Confirmation from the overall market context. And for a midterm buy, they look much lower, perhaps surprisingly, to the $190, $200 range.
Wow, quite a bit lower.
Yeah, but this is contingent on strong support, holding at long-term demand zones, and the emergence of new, tangible catalysts, like major AI advancements actually being announced or significant product launches hitting the market.
So that's more of a longer-term, value-based entry if a bigger dip happens.
Exactly. This isn't just theoretical analysis. It's designed to be a practical guide for execution at different potential levels.
Okay, this is incredibly detailed on the technical and rhythmic side. But here's where it gets really interesting for many investors. Beyond the charts and the rhythms, what's the fundamental story underpinning Apple's potential move to $260? What are the financial highlights and the news drivers that could genuinely push it forward or, conversely, hold it back?
Yeah, this raises that important question about balancing technical analysis with fundamental strength, always crucial. And fundamentally, Apple's latest financial results for Q3 2025 painted a robust picture. Revenue hit $94 billion. That's a solid 10% year-over-year increase.
10% for a company that size is significant.
It really is. And earnings per share, or EPS, climbed 12% to $1.57. Crucially, their services revenue reached an all-time high.
That services number just keeps growing.
It does, and that's a very high-margin part of their business, which significantly boosts overall profitability. The company boasts a colossal market cap, somewhere between $3.0 to $3.4 trillion, a PE ratio around 30x.
Still quite high historically.
It is. Reflects high expectations, a modest dividend yield of 0.45%, but importantly, strong operating cash flow growth and a healthy net profit margin of around 24%. These are undeniably strong financial indicators for a company of its immense scale.
Those are impressive numbers, especially that services revenue growth. It really speaks to the stickiness of Apple's ecosystem. But what about the forward-looking aspect? What are the big catalysts AUREA identifies that could really drive that move to $260?
Right, the future drivers. AUA points to several significant positive catalysts. There's considerable anticipation, as we mentioned, for the upcoming iPhone 17 launch. Specifically, the buzz around that iPhone Air model could really reignite consumer excitement and upgrade cycles.
A new form factor, maybe?
Possibly. Then on the AI front, potential AI partnerships, like the rumored one with Google Gemini, are expected to dramatically upgrade Siri's performance.
Siri could definitely use an upgrade.
Yeah, making Apple's entire ecosystem even more powerful and integrated. And finally, there is a broader macroeconomic tailwind, potentially, from the U.S. CapEx plan, over $500 billion in investments over the coming years. That could indirectly benefit a leading tech giant like Apple through increased economic activity and demand for advanced tech.
Okay, those are some strong potential tailwinds. But every investment, no matter how dominant the company, comes with risks. What are the key risks that AUREA highlights? The potential speed bumps on Apple's road to $260.
Absolutely. Got to look at the downsides. The primary risks AUREA identifies include intensifying global competition. Specific pressure noted from Samsung, particularly in the, cutthroat smartphone market.
Competition isn't going away.
Never. There are also ongoing concerns regarding Apple's valuation. Its premium multiples mean the stock is priced for strong growth, and any misstep, any disappointment, could lead to a reevaluation by the market.
High expectations mean high risk if they aren't met.
Exactly. And finally, potential delays in the crucial execution of its ambitious AI strategies could temper enthusiasm or impact future growth projections. AI is key to the narrative right now. It's a reminder that even titans face formidable headwinds and, high expectations.
Understood. Are there any other key indicators, maybe technical or sentiment-based, beyond the core financials and news that AUREA looks at to really round out their comprehensive picture of Apple's market position.
Yes, they cast a wide net. The analysis notes the Relative Strength Index, or RSI, sitting at 58.
So not overbought yet.
Right, which is generally seen as leaving room for upward movement. The moving average convergence divergence, or MACD, a key momentum indicator, is apparently shifting from bearish to bullish. That's typically a positive signal for trend followers.
Okay.
There's also mention of BW expansion, Bollinger Width expansion, which in technical analysis often points to increased volatility or a broadening of market participation. Sometimes precedes significant moves up or down.
Something to watch.
Definitely. And crucially, institutional flows apparently show net buying. Large funds actively accumulating shares, especially driven by a focus on AI and services growth. And those rumors of a Gemini partnership, they aren't just a catalyst. If confirmed, AUREA thinks they could spark significant immediate trading surges.
So after all this detailed analysis, from the deep charts to the financial statements, AUREA also looks at the sentiment in the broader community. What's the vibe out there among other investors, and how does that factor into the overall outlook for Apple?
Yeah, it's interesting. If we connect this to the bigger picture, community sentiment offers a fascinating, albeit sometimes, noisy final layer of perspective.
It can be an echo chamber sometimes.
You can. But AUREA tracks it. On Reddit, mentions of Apple actually increased by 15% month over month. iPhone 17 and AI upgrade were top keywords, clearly reflecting that strong anticipation we talked about. Twitter data shows a notably positive sentiment, 60% positive, compared to 22% negative and 18% neutral. Positive keywords there include breakthrough, expansion, and AI, reinforcing that optimistic narrative.
Okay. Pretty bullish on Twitter.
Seems so. And StockTwits, another platform popular with traders, indicates 70% bullish sentiment against 30% bearish, so generally positive vibes. However, and this is important, it's vital to acknowledge the negative keywords cited on Twitter, like competition, valuation, and delay.
Echoing the risks we just discussed.
Exactly. So this confluence of technical rhythms, fundamental strength, and this social sentiment ultimately shapes AUREA's holistic outlook.
It sounds like AUREA is truly trying to capture the full spectrum of market inputs, from cold hard numbers to the collective human pulse. So wrapping it all up then, what's their final outlook and risk summary for Apple's journey towards that $260 mark?
Okay, the bottom line from AUREA, they conclude with I'd say, confident outlook. The combination of strong potential AI partnerships, an anticipated robust product cycle like the iPhone 17, and those sustained ETF inflows. They see these as powerful forces supporting a midterm upside to $260.
Despite the potential bumps?
Despite clearly acknowledging the potential for volatility along the way. The key risks, as we've highlighted, remain competitive pressure, its premium valuation, and the crucial, timely execution of its AI strategies. Need to watch those closely. But ultimately, Apple is still viewed as a core holding in mega-cap ETF strategies. That underscores its enduring importance and maybe stability within large investment portfolios.
What an incredible deep dive into Apple's potential. Really comprehensive. We've journeyed through AUREA's unique rhythmic analysis, delved into specific chart patterns, the implications of Elliott waves. We unpacked crucial financial details, future catalysts, and even felt the pulse of the investing community. It's clear that understanding a stock as complex and influential as Apple requires looking at it from, well, multiple perspectives, almost like decoding a complex symphony of market signals.
It really is like a symphony. And this raises an important question maybe for you to ponder as you reflect on all this. How much of market rhythm is a predictable pattern that can actually be decoded, like AUREA attempts? And how much is ultimately influenced by the collective human interpretation of those patterns? The sentiment, the fear, the greed.
The pattern versus the psychology interpreting the pattern.
Exactly. As you think about your own investment journey, consider how integrating such a holistic view, combining technical rhythm with fundamental strength, and that evolving market sentiment could truly transform your decision-making. Just remember, this report we discussed is based on AUREA's specific VYRA rhythm analysis method. It combines chart rhythm and liquidity patterns to try and identify optimal trading entry points. And of course, all investment decisions are ultimately the responsibility of the individual investor.
A crucial reminder. Thank you for breaking down some detailed analysis today. Lots to think about regarding Apple and market rhythms.